Let's start with what Alchemy does. So it's a developer platform. What does that mean in layman's terms?
The simplest way you can think about Alchemy is if you're technical as the AWS of crypto. So whenever you open an application like Lyft or Uber, Amazon is actually powering the technology behind that. When you open an OpenSea or an NFT and look at that, that's actually powered by Alchemy.
So these apps you're talking about are built on blockchain with the sort of behind the scenes infrastructure?
Exactly. Alchemy is basically, you can think of it as if you need to build a skyscraper, you need construction equipment, cranes, front hoe loaders, these different types of things. Alchemy provides the tooling and infrastructure that developers need to build applications.
And so what's the appeal for a developer who's going to build an application? Why would they want to build it on blockchain versus all of the other options out there?
That's a great question. When you think about the big shifts in technology, there's 3 technology shifts in the last 100 years that have really changed our world. The first one is computers. And that was the idea that machines could repeat and follow human instructions. Then the internet came along and allowed machines to exchange information between each other. Then blockchain came along and allowed machines to exchange value. So I think there's a lot of applications you'll see that try to take Web 2 concepts like internet concepts and bring them to the blockchain world. But fundamentally, the applications are going to change the way we interact on a daily basis, are going to be the ones that take advantage of this new capabilities to do new things that we couldn't do before. Maybe a quick example of that. So on the internet, the first applications on the internet were people taking real world items and moving them online in a kind of skeuomorphic format. So for example, putting your recipes online or having a white pages online. And those were useful. It's marginally more useful than a physical copy of the white pages. But the true applications that really changed the game were things like social media, email, Uber, Airbnb, these kind of things that were never possible before internet. So we'll see a proliferation of applications like that for crypto as time goes on.
I want to get your take on what you're seeing in some of the examples you mentioned. Last week, though, you had some news, $25 million grant for developers. Why do that in a time when other crypto companies are really tightening their belts and trying to preserve costs? Why spend that money on developers right now?
This is something that we've thought about for many, many years. The last several rounds we did, we've actually been a profitable company for a very long time. And we raised the money. So in cases like a downturn like this, we could double down and reinvest in the developer ecosystem. When you see a market downturn, this is kind of similar to the dot-com bubble, not as extreme in magnitude in terms of the crypto crash, but you have seen a pullback in terms of resources for VCs coming into the space and funding early stage companies. We believe very strongly that what's going to make crypto successful and what's going to make Web3 successful is the people who are building new applications being able to do that. So we're doubling down to help push the whole ecosystem forward. And ultimately, our goal here is not just to make Alchemy successful, it's to bring Web3 to the world.
And so the more they're building, that would seem to be better for your business. What's the profit engine for Alchemy and how are you guys making money?
We have a very long-term view of profit. We are profitable now, and we're in a very good cash position, which allows us to do these kind of initiatives. But the whole point of Alchemy is really to bring this new technology to the world and make it accessible. In order to do that, we have to reinvest in the cycle of life, or as we call it, this virtuous cycle that enables a new industry to be built. In any new industry, it's the same cycle. You have developers or builders who are creating something, then consumers come and use those products that developers made, and then developers come back and build more products because of increased consumer demand. So that is kind of the virtuous cycle that powers any industry. When we think about crypto, it's exactly the same, and we are heavily focused on making sure that first part of the cycle is well and alive. And that's our kind of focus right now, increasing developer adoption.
Is it the same revenue model, though, as an AWS? Are you taking sort of a percentage from developers? How do you guys make money in this process?
We have the same revenue model as AWS. It's a compute-based model. So every time people effectively pay per query. So if you go to OpenSea and view an NFT, we get paid every time that page reloads.
And are developers deterred by what's going on right now with crypto? And we mentioned some of the prices down significantly, less VC funding. Are you seeing that deter developers right now? And what's the overall sense of kind of the vibe right now in crypto among developers?
So we've actually never shared this publicly on broadcast before, but we have access to a lot of data that other people in the industry don't see, we've seen some very interesting trends. So as you probably know, the macro crypto market has had a severe crash. When you look at NFT trading volume alone, from the heights in November 2021, we've seen a 70% drawdown, which has been potentially scary if you're looking at it from a macro perspective. What we've seen on the fundamentals level has been exactly the opposite. Since January this year, we've seen a 3x in the number of developers building in the space. This is across multiple chains, not just Ethereum, across Ethereum L2s, across Solana. On Ethereum L2s alone, we've seen a 465% increase since January in terms of developer adoption. So what we've seen as that, despite the hype, there is a big surge of people building in the space. And the reason this is really interesting is, in contrast to 2017, when there was a 2017 crash, what we noticed is there wasn't a huge surge in builders then, especially in the larger companies. We have a lot of Fortune 10 companies, Fortune 50 companies who are coming in and really excited about building and deploying crypto products to their billions of users. And that's something that we didn't see back in 2017. So it's a really, really exciting time right now.
So why do you think that is? Is there just more opportunity? You mentioned L2s or layer 2s. Is the technology just further along and there's more options for developers? What would you attribute that to?
I think the shift between 2017 and 2022 now is, back in 2017, when you talk to these large banks or institutions, what you saw was it was a research project for them. They said, hey, you know, this crypto is a buzzword thing. We're going to have a small team of 4 developers, and they're going to build out, put one of our financial applications on the blockchain and see if we can make it like cross-border payments or whatever, right? But it wasn't a core part of their business. What we're seeing now is NFTs have brought the first real consumer use case. Basically, what you need for a technology to be adopted is a day-to-day use case that normal people in their day-to-day lives can benefit and get value from. And we've seen that first one, which is NFTs, right? And what you see with these Fortune 10, Fortune 50, Fortune 100 companies is that they're rolling out NFTs to billions of users. And that is a key difference. In addition, we've seen maturation of different types of pre-existing markets, such as DeFi. For example, we've talked to users in Africa who we power, who we had this conversation 2 weeks ago, and this guy, I forgot his name, but he basically actually takes out DeFi loans in order to buy his groceries. So this isn't some kind of speculative trading. It's come to be people's real world daily use of financial infrastructure.
You talked about some of the Fortune 500 companies. What are you seeing from that side of the market? I think developers and think sort of an individual sitting behind a computer doing this on their own, or maybe with a small team. But you're talking about some of the biggest companies on the S&P 500. What are you seeing? I don't know if you can name names, but from some of the more established public companies in a lot of instances moving into NFTs?
Yeah. So we've seen, first, actually, to clarify, we see adoption across the board. There is more advanced and more detailed adoption in the kind of smaller developer, crypto native Web3 front. That being said, we are seeing virtually most of the companies in the Fortune 500 are exploring crypto. You know, we're powering a lot of them. A lot of them are not public, so I can't say. One of the ones we've gone public with is Facebook. So Facebook is launching NFTs into Instagram and to the Facebook app and probably across a lot of their other properties. And we've been very excited to work with them. We've seen them kind of realize the potential, them and other companies realize the potential of basically this new technology for their audience, and they see the demand from their audience. So they're bringing that directly. And the reason it's really exciting is they have audiences of billions of users that have want this technology. And that's something that they can provide really instantly. And when you think about a traditional application, they have to go get a billion users or get 100 million users or even 1 million users. And Facebook just has that and can turn it on.
We talked about NFTs a little bit. I want to go back to that trading volume and the slowdown we've seen. You're saying that you're still seeing the same excitement on the developer side. How do you sort of square that, where valuations are coming down, people are less excited about maybe trading these things, but people are still building them at the same velocity? How do you make sense of that?
Whenever you see a froth come out of a market, so I think you can liken this to the dot-com bust in 2001, obviously not as extreme, but so Amazon stock declined 90% in that span, and it was like a really tough time. That being said, a lot of people thought Amazon was dead. A lot of people thought the internet was dead. A lot of people thought all these other maybe not so high quality companies were dead. And in reality, the not so high quality companies were dead. the internet was not dead and Amazon was not dead. And what you see is anytime you have a reduction in the market of this magnitude, there will be a lot of companies that are very frothy, are maybe there for the hype, that do die off. And we have seen that, and we will continue to see that over the next 6 to 18 months. The thing we do notice is that the technology is well and alive. And that is what the tripling of developers in the space over the last 6 months indicates, is that there's a lot of excitement here. There's fundamentals, there's real value that's being created. And that will take time to eventually reach billions of people around the globe, but it's alive and well. And that's what's really exciting to us. If you look at Amazon right now, it's 140x of where it was at the bottom. So there is a lot of upside still here.
Yeah, absolutely. Well, you talked about some of the layer 1, layer 2 protocols you guys are building on, or at least enabling others to build on. Are there certain blockchains you're seeing emerge as a winner? Is it still Ethereum, or are others becoming a bit more important and relevant at this point?
If you look at the historical trend of different blockchains, I think Ethereum had a very, very strong lock on the entire market, even as of a year ago. I think at the beginning of 2020, my hypothesis was Ethereum was like 95 to 100% going to be the dominant blockchain of the future. What we've realized now is I have a pretty strong feeling that Ethereum will definitely be around, and it will be a strong contender in the future. It will be a leading blockchain in the future. It is less clear that it will be the only blockchain in the future. And what is looking more likely right now is that there will be a multi-blockchain world. We've seen a lot of adoption across the layer 2s, Polygon in particular, in the last quarter alone. And this is on a very large user base. Last quarter alone, we've seen a 42% increase in the number of developers on Polygon. Solana, a new partnership that we announced, Solana is getting a lot of attention and a lot of excitement. A lot of these things are due to the low transaction fees and the fast block times, and it's just a better user experience. Ethereum has plans to do the merge and move on to what was formerly called Ethereum 2, so it should solve a lot of those problems. But in the time that that's not happened, you see a lot of these new technologies emerging to fill that gap.
So what are you seeing built on top of blockchain at this point? What are some tangible examples of someone who might not be familiar with what type of apps you could build? Give us some of the best use cases you've seen, and maybe pockets of the market where you're seeing more activity, whether it's gaming or DeFi. Walk us through kind of the landscape right now.
Totally. So I think there's a few different categories of examples. The first thing to caveat here is it's still very early. Everyone's likening this to like 2003, 2004, the internet, but we're still in 1995. The basic applications are still being built out. And I think the mental shift that you have to take is that it's actually a much, much earlier than we think it is. The second point here is when you look at the spectrum of applications, we're kind of lucky to see all these different types of applications because we're kind of a very generic platform that powers a broad spectrum of the space. So I would categorize it into two kind of main categories of applications. One is Web3 native applications, and one is Web2 applications that are kind of Web3ified. So in that sense, in the second category, you see things like cross-border payments, cryptocurrency exchanges that let you buy and sell cryptocurrency and stocks, and kind of things that we do in the normal world. In the Web3 native experiences, we see things that were never possible before. And we're a big believer at Alchemy that these are going to be the ones that drive the adoption and excitement in the future. One of the things you can see, let me give you one concrete example. One of our customers is a customer called Royal. Right now, when you're a musician, you make royalties on your songs, and Spotify gets a huge chunk, and all these like middlemen in the industry get a huge chunk. The challenge here is that the audience, the people who are listening, don't get any part of that, of the streaming royalties for being a fan, for supporting the ecosystem. What they're doing now is they're letting artists kind of like share part of those royalties. And this was something that was never possible before due to technological constraints, legal constraints, and all of these different logistical capabilities. So what we're seeing now is people like Diplo can launch an album, and all of the fans who listen can buy into it, or maybe he just gave it away for free, and they get a cut of all the streaming royalties. And this is kind of one of those moments that was not possible pre-Web3. When you think of something like Facebook, that was not possible before the internet, right? Putting your recipe online for how you make your pancakes, that was kind of possible. You could share that. It's obviously better on the internet, but what you'll see over the next 5 to 10 years is a proliferation of applications that were never possible before. And that's going to be when Web3 really takes off.
So if we're so early, if it's still 1995 at this point, do we think Web3 is overhyped? There's been a lot of criticism of maybe too much froth in that market and too much excitement. What's your take on where we are in Web3 and if it's maybe overhyped at this point?
I think whenever you have a new technology, it goes through these natural cycles. Like, is every company that in Web3 that raised a bunch of money going to be the next Facebook or Amazon? Definitely not, right? There was a lot of excitement, a lot of people. Anytime people can make money, in the dot-com bubble that was on stocks, people thought they could make a lot of money. In here, it's been on NFTs and trading cryptocurrency, and people thought we could make a lot of money. Naturally, there is a lot of hype. One of the most exciting things, I think the reason we're very bullish at Alchemy and about the space is that you see this increase in developer adoption, right? If there was a massive spike and a crash with just a bunch of hype, I would have said, crypto is 10, 20 years off. I still believe in the technology, but we're not even close on the applications. However, with seeing that, hey, even though the market has crashed, we're seeing a massive uptick in the amount of number of developers that are coming in and building. That to us is like the strongest bull signal. It's a very strong leading indicator. It may not mean in the next 3 months the markets rebound or the next 12 months or the next 18 months. But what it does mean is that if this trend continues in the next 3 to 5 to 10 years, we'll see your cousins, your friends, your family using Web3 powered applications.
So DeFi has been one of the pockets of the market that seems to have gotten a lot of buzz, decentralized finance, also a lot of hacks in that space. Is there a reputational risk either to your company, Alchemy, or to the space in general, if the industry is not able to stem that and slow down some of the hacks that we've seen that really have brought attention in a negative way to the space?
I think security is a really, really important aspect. We see a lot of teams working on security, and it's something we take very seriously. At Alchemy, we invest in it very heavily, and we've never had, knock on wood, we've never had any kind of security issues. One of the challenges here is when you look at the paradigm, if you look at DeFi as a completed product that should be perfect, if you're comparing it to like a Facebook or an Instagram, it's going to look like a terrible experience. However, if you compare it to maybe a hackathon project, and for those of you who may not be engineers, hackathon is where you get in a room with a bunch of your friends and code all night to build something as a prototype. In that sense, we're still very, very early in DeFi's evolution. And one of the things that we like to talk about is, what could this product look like? Let's say all these things were fixed, right? So if you look at tech crypto right now, if you look at Ethereum right now, and you say this is the final state and nothing's going to change, like no one would use it, right? There's no world in which Ethereum in today is a global technology that everyone uses. However, if you look at it in the same way that you look at dial-up internet, or even your 56K modem back in the day, that wasn't the final form of internet. We wouldn't have video streaming. We wouldn't be able to have this conversation if that was the end of the internet, right? But internet gets better, the technology gets better, and Moore's law definitely holds in crypto. So one of the things we're heavily banking on here is that DeFi will get better. The security models will get better. If they don't, then DeFi is not going to exist as it does. But we have strong conviction that, especially looking at the trends of the excitement and adoption around there, we have a lot of conviction that the security models will get better.
So still early days, and that's interesting to get your perspective on. So bottom line, though, during what we're calling crypto winter, you're still seeing activity. People are still building through crypto winter.
Not only are we seeing activity, we've actually seen an acceleration in the market. 3x in a tripling in developers in 6 months is like incredible, right? And Alchemy has been around for many, many years. There was many months. We've had roughly monotonically increasing growth every single month, but honestly never to this accelerated rate. Our hypothesis here is that there were a lot of teams that raised a bunch of venture money and got really excited over the last year. And what happens is you see this cascading effect. When the markets crash, people tend to pause on the Super Bowl ads. They tend to pause on the stadiums and really just get down to building product. We've seen that across all of the big companies. A lot of our friends run, the large crypto exchanges, and not that that's a proxy for small developers, but it kind of shows you they have the same mentality. They're like, let's stop all the external stuff. Let's go heads down and we're going to build. And that's kind of a common theme throughout the industry. And it's honestly really exciting because we believe fundamentally that's what's going to push the industry forward. But what we've seen, especially through Alchemy Ventures, we have a ventures arm that invests in all these companies. What we have seen is cutting of marketing budgets, tightening of spend across the board, and a renewed focus of we have to get to product market fit. Because when you have a bunch of free flowing cash in the industry, product market fit isn't that important. But when you don't, it is very important. And getting to a survivable state of default profitability is high priority for these companies. So they have to start building. So I think it's almost like this market crash, honestly, is maybe a good thing for the entire industry in terms of actually pushing the timeline forward. Obviously, you never want a market to crash. But that being said, couldn't be a better outcome for the space given what's happened.